Every green candle, every red candle, every wick, every body, every doji you've scrolled past. They're all telling you exactly who's about to win the next move. Buyers or sellers, up or down, continuation or reversal. Candlesticks aren't patterns. They're a real-time, live-action war between buyers and sellers, and every candle that closes is a snapshot of who's currently winning that war. So in this video, I'm going to break down the 3 most important candlesticks. I'm going to explain everything I wish someone told me about candlesticks when I started trading. At the end of this video, you will be able to look at any candlesticks and understand what it's saying, the story it's telling you about the market. So give this video a like, subscribe to the channel, and let's get started. Let's start with the first type, strength candles. The market is a battle between buying and selling. That's all it is. When more buyers show up, prices rise. When more sellers arrive, prices fall. Simple supply and demand. High demand with low supply leads to price appreciation. Low demand with high supply leads to price depreciation. Candlesticks are the visual record of this battle. They show you who's in control right now and what's likely to happen next. A strength candle is the clearest signal of control you can get. If we have a candle that opens here and closes here with a large candle body and a small upper wick, this is the result of strong buying. Large body, small wick, clean move. That's uninterrupted momentum. The buyers pushed price higher and the sellers couldn't slow them down. Same thing in reverse. A bearish candle that opens here, closes here, has a large candle body and a small lower wick. This is the result of strong selling. Sellers drove price down without resistance from buyers. That's what a strength candle tells you. One side is dominating. And when one side dominates, the move usually continues. That's why after a strength candle prints, you can assume there will be continued upside or downside, depending if the candle was bullish or bearish. It's not a guarantee, nothing in trading is, but it's a high probability bias. And leading on from that, bullish candles with no upper wick and bearish candles with no lower wick, so just flat tops and flat bottoms like these, although they're reasonably rare in the market, when they do print, they are even stronger than little wicks because they show no resistance from sellers or buyers against the larger move throughout the specified period of time. So if we see an hourly candle close completely bullish with absolutely no wick above, it gives us a very strong indication that the buyers are fully controlling this market right now. There is no resistance from sellers, and after a strength candle like this prints, you can assume there will generally be continued upside or downside, depending on if the candle was bullish or bearish. Now, there will be pullbacks, and of course context matters, which we'll get into soon, but ultimately it shows control, leading to further moves in that direction in most cases. When we see these strength candles, we know 2 things. Number 1, we want to move with the strength. Number 2, we want to make sure that we don't trade against it. Very simple for getting good trades and avoiding bad ones. Now, when we're looking at strength candles, size matters too, and this is something I want to hammer in. We have 4 examples here. The bigger the body of the strength candle, the more meaningful it is. A massive bullish candle is showing a huge influx of buying pressure. A small bullish candle, even if it has no wick, is showing some control, but not nearly as much conviction. Large candles equal massive buying or selling. Small candles equal weaker, less aggressive moves. Keep that in mind when you're reading your chart. The engulfing pattern is just a strength candle on steroids. You've probably heard of it. An engulfing candle is when one candle completely covers, or engulfs, multiple previous candles. If you see 4 small bullish candles get wiped out by one massive bearish candle, that's a bearish engulfing. And what it's telling you is that sellers just achieved in one candle what it took buyers 4 candles to do. That's a serious shift in control. That's not random, that's a takeover. Same thing in reverse for a bullish engulfing. Buyers just demolished multiple bearish candles in one shot. That's strength. That's a signal. So when you see engulfing patterns, stop thinking of them as just a pattern. Think of them as a strength candle showing a massive shift in who controls the market. So to round up the foundations of strength candles, a strength candle shows clear control from either buyers or sellers in a market. Larger bodies with small or no wicks show uninterrupted buying or selling pressure, and that is exactly what we want to see. And this gives us an insight into where the market is likely to move next. A strength candle on the bullish side will potentially lead into further upside, and a strength candle on the bearish side will potentially lead into lower prices or selling opportunities. All right, moving on to the second type, control shift candles. This one is huge if you want to catch reversals before they fully play out. Here's what's happening with a control shift candle. It shows you a takeover happening in real time. So while a strength candle shows you continuation, a control shift candle shows you reversal. Buyers are losing grip and sellers are stepping in to take over, or vice versa. How do you spot it? The wick. That's the entire story. A control shift candle has a large wick on one side, and that wick is showing you exactly where the other team stepped in and reversed the move. Let me give you a real example of how this forms. Imagine a candle opens. Buyers come in, push the price way up. Looks like a strong bullish move, right? But before the candle closes, sellers step in hard. They reverse the entire move. By the time the candle closes, the price is back down where it opened. And now you've got this huge upper wick on the candle. What does that tell you? It tells you the buyers tried to take control. They failed. Sellers came in and dominated. And now we're entering a phase where sellers are likely to keep pushing lower. That long upper wick is rejected. It's the market saying, no, we're not going higher right now. Same logic in reverse. A candle with a long lower wick is showing sellers tried to push down, but buyers came in and reversed it. That's a bullish control shift. Now here's something important. With control shift candles, it doesn't matter if the candle closes bullish or bearish. Doesn't matter. Red, green, doesn't make a difference. It's the wick that tells the story. You could have a candle that closes slightly red, but has a massive lower wick, and that's still a bullish control shift, because what matters is that sellers got rejected. A lot of traders miss this. They focus on the body color and ignore the wick. Train yourself to do the opposite. Look at the wick first. Pin bars. You've probably heard of pin bars. Pin bars are pretty much control shift candles. That's all they are. It's a candle with a tiny body and a huge wick on one side. People give it a fancy name, but it's just a control shift in real time. The reason pin bars work is the same reason any control shift candle works. They're showing rejection. They're showing one side trying to push and the other side completely overpowering them. How do you trade these? Generally speaking, you buy when you see a bullish control shift, and you sell when you see a bearish control shift. But, and this is where most traders mess up, context matters. A lot. We're going to get into context in a minute, because it's not as simple as see pin bar, take trade. But just understand the foundation here. Control shift candles show you reversals before they fully happen. They give you an early read. And if you can spot them in the right context, at supply zones, demand zones, or after a long move, they become incredibly powerful. All right, let's look at the third type of candle, indecision candles. This one is interesting because it's the only candle that doesn't really tell you who's winning. It tells you that nobody is winning. Buyers and sellers are equally weighted. Nobody is in control. So what does it look like? An indecision candle, sometimes called a doji, has roughly equal wicks on both sides, and the open and close are really close together. So you've got attempts to go up, attempts to go down, but the market ends up basically where it started. Let me walk you through how it forms. Candle opens. Buyers push higher. Sellers reverse it. Sellers push lower. Buyers reverse that. By the time the candle closes, the price is back near where it opened. So what happened? Both sides tried. Both sides failed. It's a pure state of indecision in the market. Now, indecision candles can come in different forms. Sometimes the body is super small. Sometimes it's a little bigger. Sometimes the wicks are really long. Sometimes they're medium. What we're looking for is a candle that opens and closes near itself, with wicks on both sides showing attempts in both directions without any clear winner.
Now, how do we actually trade indecision? Well, we cannot directly trade it because it doesn't tell us who's in control, right? We want to be on the right side of the market. If buyers aren't in control and sellers aren't in control, then we can't directly trade that candle. But we can use indecision candles for trades once the market creates clear direction. So, for example, if we have an indecision candle which shows no control by either party, and then the market breaks out of that range, we can use the pullback to buy or sell in line with whichever direction has taken control, whether that's buying or selling. And also, one of its primary use cases is to be used to gauge the likelihood of reversals when it prints in points of interest like supply zones or demand zones. So here we see a collection of different candles which shows after the selling move, the sellers have lost control. This itself doesn't confirm a trade. We would generally want to see something like a bullish engulfing to confirm that the buyers did indeed take control. But the indecision is the first sign that the market is indeed slowing down. So it's a good place to start prepping buys and keeping in mind that this bias may shift now that we've seen a complete slowdown in momentum. So to round up indecision, it's not directly tradable as it doesn't give us clear direction from buyers or sellers, but instead it is used for gauging reversals and also taking trades from the point where one party finds control. So now it's time to use what we've learned in the first section of this video to actually bring it into real markets and look at some context in real charts. So we're going to go through, first of all, each of the candle types I've showed you. We have, number one, strength candles. These are candles like this one, this one, this one. All of these large-bodied candles, okay? These are strength candles, which show clear control from buyers or sellers. Now you can see it's the strength candles that are actually creating the up and down moves, okay? The second type of candle is that control shift candle. So if we look at this candle here, this gray one, I'll just mark it so you can see. This shows a control shift, which could be a first indication that potentially the market could reverse from here. Because what we've seen is a push up, a few strength candles. We've then had a pullback, but a massive push back up from buyers, bringing us back up to this point and pretty much rejecting all price action that took place underneath that level there around here. Okay, so that is a control shift candle. That's what we would use to gauge potential reversals. And then the third type of candle is the indecision candle. I'll show you a few points where these indecision candles form. So after we have this strength movement, look up here, we have some indecision, more indecision, the market breaks out higher and creates once again more indecision candles. So you can see there's 1, 2, 3, 4, 5 there before the movement lower. So this whole area pretty much up here is a phase of indecision. The market has slowed down, buyers are stepping out, and the market is deciding which way it wants to go. Sellers then step back in and drive the market lower. So this phase of indecision, indicated by all of those different separate indecision candles, it's kind of that first sign of reversal that we spoke about, all right? What we've started to see is no large, strong candles and more sideways candles with wicks either side. Now, another point of indecision is over here. This one's important as well. See this doji candle, this little gray one? This created a massive push of strength. So this is basically what we could see as a final point of consolidation before a large runaway in the market. Now, this, of course, can then be used as a potential demand zone. Now, let me explain. Demand zones are areas where institutional demand or large buying has entered the market. We can determine these demand zones by looking at indecision candles before strength candles. This is an indecision candle. These are strength candles. So that tells us that this area here is where significant buying took place in the past. The general idea we can then work with is that if the market returns to one of those indecision candles underneath the strength candles, we may see a second wave of buying. And this is where we can start to read into the story in the current existing candles. So to run through exactly what we've seen here, just from this point onwards, we have a consolidation where we have indecision in the market. We then have clear control from buyers in this massive strength move with multiple strength candles. Eventually, the market reaches a phase of indecision up here, and the market is struggling to push higher. There is some alleviation from buyers who were buying in earlier, so there'll be more buy positions being closed out. And as well as that, people start to short or sell the market because they see this weakness creeping in. We then see these strength moves from sellers. However, an important thing to note here is what we can consider as multi-candle momentum. When I'm saying that, if you remember back to the engulfing, we can have some downside like this, which takes quite a while, and then some upside, which would very quickly wipe out all of the downside. So what we can also consider is how fast movements are occurring, and that can give us a good insight into what's actually going on. Now, if we take a look at this buying move, right, this move upwards, we managed to cover from this low up to this high, all of this ground, in 15 hours. Now the return from that high to that low has actually taken 4 days. So it's a significantly longer time frame to get down here than it was to initially get up here. What does this tell us? Well, for the most part, this actually indicates that the buying that was taking place here is significantly stronger than any of the selling that has taken place on the way back down. Because yes, although sellers are in control at this point, they are moving exceptionally slow in comparison to the amount of power that the buyers brought to the market. So this again can be another sign that we've pretty much completely gathered from candlesticks as to who is in control of this market on a bigger time horizon. So we have buyers taking control, very fast push up, alleviation and indecision. Sellers taking control, but with significantly less strength, hence the massive sideways movements of this market and the failure to take this market lower at any significant pace. And now that the market has returned to what we can call a point of interest, being this area of demand where big buying took place before, what can we now see on these candles? Well, we can start to see control shifts coming in. So if we zoom in on this bit of price action, what do these wicks tell us? These are rejected prices. So although the market managed to come down to at its lowest point here, we actually never saw it close into that area of demand, right? So we've actually seen buying pressure coming in from here every time that the sellers have tried to take the market lower, and we've had that reversal back to the upside. I like to look at structural changes to confirm my trades, which generally would mean if I wanted to buy into this market, I'd want to see one of the previous highs taken out. We've got a problem here, though. If we take a look at the candles, we can see that there's actually more indecision and maybe a little bit of seller control kicking in at these levels here. Rather than closing with strength candles, we've actually started to see some wick rejections. So it's ideal to not try buying into this, because if the wick rejections follow through, we could potentially move to the downside. Fortunately for us, however, in terms of our buying narrative, we can see that after we had this small push down from sellers, we actually hit this point and had a huge drive back to the upside. This is the most clear control shift candle that we can see. Big sell, and then buyers step in and push us all the way back up. So from this point on, we actually never managed to see any closures underneath this level, okay? We had push from this point, and from there on, this was the lowest point we ever got to, and every attempt to go lower was indeed rejected. So there's our control shift candle. There's some solid wick rejections as well, showing us that the buyers are stepping in here. And now I want to draw your attention to this little area here. What do we see? 1, 2, 3 indecision candles, a 4th relative indecision candle, but it does have a bit more weakness. Now, with all of the things combined, in seeing that we're in a point of interest, a high interest buying point, we're seeing control shifts from the downside, we're seeing buyers stepping in, and we're now starting to see indecision and then a drive to the upside with this small strength candle. What could we presume from everything that we've looked at so far? Well, the obvious presumption at this point would be that the market could potentially be ready to trade higher. If we zoom back out and consider what we said about the timing and the multi-candle momentum, that is simply referring to the speed of this movement is exceptionally faster, showing buyers are exceptionally stronger than the speed of the return back down, which is the strength of the sellers. So we know from a larger perspective, buyers are in control, okay? We know from a lower perspective that once again, it looks like now that we've met this high interest area, buyers are taking control. We would want to see some more strength candles to really confirm anything here, okay? We haven't seen closures above a notable structure point, which is pretty much going to be here. We obviously have got more points as well, which would indicate further strength from buyers, but we would realistically need to see some strength candles making some significant movements in order for us to be confident enough to buy this market. Because although we've seen those first signs of reversal, as we've said, control, shift, and indecision, we haven't yet seen solid buyer strength. We would need to see that in order to actually build our narrative and understand that the market direction is under control from the buyers. So, pushing this market forward a little bit, you can see that following on from the indecision, we have one more small phase of indecision, which is the consolidation where buyers are accumulating. We once again have then a control shift candle. And what precedes the control shift candle? So let's take a look. The control shift candle is going to be this one here. We see an attempt to go lower from sellers, big buying stepping in at the low, and then a close higher than the open. So this actually shows a big attempt to go lower, reversed by buyers. This then precedes these large strength candles. These two candles have engulfed a massive amount of previous bearish price action, okay? If we were to quantify it, we have here an entire range of around 2 days, nearly 3 days worth of price action cleared back out in pretty much 1 hour, okay? We have one 30-minute candle, two 30-minute candles, and they've wiped out nearly 3 days of downside price action, which shows us that the buyers are definitely back in control. Now, what can we do here then? Well, of course, as we said, the areas that we like to buy from are going to be the indecision candles before large movements up. So for this one, I'd actually look towards the control shift candle as the higher probability point to buy from. This would be where the best trades come from. Basically, what we would be looking for is, as we've said, this is a high interest point for buyers. If the market reverses to this level, it is going to be a high interest point for buyers. Again, we've seen significant strength, meaning we've seen significant demand. If the level hits again, we're probably going to see that one more time. So, with everything we have in mind now, we could actually look to take this market higher, okay? Judging from the fact that the market is of course very bullish on the bigger picture, the strong moves are a lot faster than the pullback moves, okay? We could look for targets into essentially new highs. We can buy from this area expecting that if the market reaches that level again, it will start to drive to the upside with strength, and our targets can then be leading towards further points in the trend. Basically, considering we have strong buyers, we would just simply be looking for new strong buyers to step in now that we've had that alleviation or relief in the market and came back into some high interest buying points. So here is how this would go. We see the market slowly return. Once again, a brilliant sign. Let's think about the timing here. In just 1 hour, we created all of this upside, and then it took a further 9 hours to return back down to the point that we created just after 1 hour of bullish price action, right? You can also see that there is no momentum behind these bearish moves. All of the first candles for this entire first range are indecision candles. We then did have one bearish, kind of very weak strength candle, so it wasn't really a very strong candle there at all. Remember we said the size of the candle body matters as well. And then we actually got pretty much a control shift candle, which would be this one, after that weak strength candle. So we attempted to go lower, but we rejected over 50% of that 30-minute candle's price action before then printing the next one, which once again has a small upper wick and a larger lower wick, rejecting around 35 to 40% of that candle's price action. So we know that this downward move is a lot weaker than the upward move that came before it. You see how we're reading the candles to understand the story that's happening behind the market. What we're actually doing here is basically considering, by looking into the candles, how fast the candles are forming, how strong the candles are, any indecision, any control shifts. We are building a narrative as to who is in control of this market in that battle between buyers and sellers. Because realistically, it's one of the only things that matters, okay? If the buyers are in control, we want to buy. If the sellers are in control, we want to sell. If there is no clear control, we don't want to do either at that point in time, okay? So let's round up this trade then. You can see that it did run through to make new highs. We have number one, the big picture narrative. Strong, fast buying, slower, choppier selling with a massive phase of consolidation or a larger indecision taking place pretty much from this point to this point before we have that final push lower. When the final push lower is created, it trades into an area where major buying started. We then see no closures in that level. Just under this level here, we only have wicks showing control shifts, showing failure to go lower from the sellers. Following on from that, we see a major control shift candle, which is this one here. One final attempt to go lower, completely reversed. And that is then followed by this phase of indecision, which shows no one is at control at this point in time, which is actually a good sign for buying because it means the sellers have been exhausted after attempting to go lower. Of course, this is all the first signs, and we don't have confirmation for a trade just at this point. But when we start to see the market push up with these two big strength candles, this one and this one, this pushes us past some notable structure points and creates the strength we wanted to see. Once again, as we said, this one single hour of price action reversed almost 3 days of previous price action. So we see the sellers are considerably weaker, okay, than the buyers are when they step in here. And then, once again, just to add another layer to it, we see the selling attempt back down is also considerably weak. And then we take off once we've filled the significant area, the indecision or control shift candles, where the initial buying started to take place. So here you can see we are not just looking at candlestick patterns and, textbook activity stuff. We are actually reading into the psychology behind the market. We are saying, what is it that the buyers and sellers are doing that has created this price action? How can this be used to formulate trades? We know buyers are strong, sellers are weaker. We see the buyers are strong here and the sellers are weaker. So of course, the right side of the market to be on is going to be the buy side. And as you can see, would have worked out brilliantly. So, thank you for watching. I'll see you in the next video.